What's up, everybody? Welcome to another edition of Zach's Live Trader. Here with you, as always, I am the bearded boy wonder, Dave Bartosiak. And today, my friends, it's the good, the bad, and the ugly. Want to apologize for the choppiness we've had the last couple of weeks, but we're having some major issues here with Comcast and the upstream. So things are all out of whack. I'm hoping that we'll be back to normal next week, and then I'll be in Chicago the week after that. So it is going to be a little spotty here around the holidays, but you can always catch me in the chat room, which is going along the bottom of the screen right now in Discord. All right, so I'm just going to dig into this one. This is the ugliest, by far, that I've ever seen, but we're just going to hit it. So I want to talk about this Iron Condor we had on Lulu. I was chatting with people in the chat room yesterday. So we went short December 8th. 70, 71, 64, 63 Condor here on Lulu. Max profit with Lulu between 70 and 64. Now, what happened is yesterday, Lulu rallied a little bit, which is fine. And it got well above. It got up into the 72, 73s. So I was telling people, if you can, just close that put spread. I mean, leave the put spread open, close that call spread. And a lot of people did it and left relatively unscathed. And that's a strategy that you want to do, is even when these things rally up, think about when we do a long call spread, right? It'll rally up and we still can't close it for the max, right? Because there's that implied volatility that's still in the further out call. So that's what happened here. You still had a ton of implied volatility in the 71 call, not as much as you had in the 70 call. So that's what ends up happening, is you still have a lot more delta in that 70 call than you have in the 71, and it's not as affected. Now, as it gets closer to expiration, then that shrinks, and then you can't really you're going to end up paying a buck to get out of it. But some people got out relatively unscathed. We're going to talk about that in the future, because I think that's going to be a go-to move of ours, is doing some of these condors. And maybe it'll even just be bread and butter, where every single time I do one of these, I'll say, here's a condor for you to look at. I think I might be adding that wrinkle soon. Then we have a long straddle on Tiffany's. So here we were long the December 1st. I know this is already passed, but I got to cover these. I don't want to just leave you guys hanging. 94.50, the call and the put. So break even, it either needed to go under 88.90 or over 110 cents. It closed at 97.25 on December 1st. Now, this was another scenario where maybe a couple days in, you still had some implied volatility in both of these, and you could have sold them and made a few bucks. So here, with that closing at 97.25, even if you held it, you would have got 275 for that put, or that call rather, and you would have lost about 50% on this trade. So I think the key is on a straddle, you want to sell it early, at least your losing side, and then for the condor, if you're down, you want to sell it early, and then if you're not down, then you just want to let it go. Okay, we're going to talk about this in the future. Now, here's a bull call spread on JD.com. We've still had this, the 40-43 for a buck, max profit with JD over 43. Now, we had an initial spike, and then it just gave it all up and more. Right now, the spread's only trading at 14 cents with JD at 38.50. But look, you really want 14 cents? Perhaps we get a rally over the course of next week, and you get bailed out on this one, so you just hold it. Remember I told you it's about to get ugly? It's about to get ugly. So the bear put spread on Best Buy, long the December 15th, 57.50, 52.50 put spread for a 203 net debit. Max profit with Best Buy under 52.50. This trade is shot. It's basically trading worthless. Get what you can. Looks like it's going to be a max loss. Told you it's going to get ugly, but we already knew about these, okay? Normally when this happens, if it jumps in the wrong direction, you just got to rip it, depending on how much it jumps, right? And we'll talk about that, like I said, next week. Bull call spread on AMAT. Same story here. Long December 8th, 56.59 call for 112. Max profit with AMAT over 59. AMAT's nowhere near that. Basically another max loss here. Bearish put spread on Finish Line, Foot Locker rather. Went long the December 15th, 32.30 put spread for 95 cents. Max profit with Foot Locker under 30. Foot Locker rallied in our face. This one's a dud. Another dud. This is going to be the last dud, though. So, how many people do you see actually hold themselves accountable and talk about the trades that they've talked about over the course of the last week or so? Where's Doug Cass when you need him? Doug, if you're watching, I do show it when I have egg on my face. Bull call spread on workday, long December 15th, 115, 119 call spread for 175. Max profit with workday over 119. And again, this is not working out for us. Spread looks like it's trading worthless pretty much as workday's gone in the opposite direction. Another one where it's max loss. Now, when we're talking about these max losses, I still want you guys to realize the benefit that you get trading these via options versus trading them with the stock outright. These 5 losses, if you total them all up, are probably still less than had you gone long with 100 shares of stock in one of these that didn't go our way, okay? But if it does go our way, we end up benefiting almost as much as we would have had we bought just 100 shares of the stock. So that's why we play these with options, because otherwise it would be a lot worse. Now the bullish call spread on Ulta. Long to December 15th, 225, 227.50 call spread for $1.15. Max profit with Ulta over 227.50. Right now the spread's at 115 with Ulta at 223.80. You see what I say here? Just rip it for break even. I know maybe I'm getting gun shy here. The gunslinger's no longer here because we've got I don't know, man. There's a kink. Something's wrong with the matrix. I'm on a cold streak. I get really hot for weeks, and then I get really cold, and we're cold, my friends. So this bull call spread on Ulta, we're at break even. We can get out relatively unscathed. I say we just go ahead and do so. Then we have the bullish call spread on Deere. Long December 15th, 139, 145 call spread for 255. Max profit with Deere over 145. Now we actually have a victory. So the spread's trading at 543 with John Deere over 150. Right now, you just hold it. You can go ahead and put out your offer. Hope to get close. Let's say 580s, right? Because you're probably not going to get, it's not going to be 6. I don't know, you might get close to that. As close to 6 as you can possibly get. And we're all good. So I wanted to leave on a positive note. There is our one positive. So that's all I got for you here today on the good, the bad, and the ugly. Whole lot of ugly today, but hey, that's the way the cookie crumbles, my friends. Next week, hopefully we'll get stuff rocking and rolling. I got to check in with Comcast today. We'll see. If not, we're still going to do at least 2 shows with the buffering and all the madness because you guys are so patient. I appreciate it. That you guys don't care. You say, hey, I'd rather have buffering than have nothing, so that's good for me. So that's all I got. I hope everybody has a fantastic weekend. I'll see you all next week. Have a good one.